All right, welcome everyone to this live intraday strategy webinar. Today is Wednesday, December 2nd. Good to be with you guys this morning. We just got the release of the non-farm productivity print. This is the final, or the first read, rather, the third quarter, coming in at 2.2% as expected. So a nice upward revision there. Also, unit labor costs coming in topping expectations with that print of 1.8% versus expected 1%. So the final print for third quarter, again, topping expectations. You've been seeing the dollar strong against most of its major counterparts to begin with. Look at relative dollar performance, sees that we're strong against all of its major counterparts, save Aussie with a slight advance here of 0.03%. Biggest loser on the session, interestingly enough, has been the pound with a loss of 0.47%. So we got a lot to cover today. Long list of pairs to review. As always, feel free to throw out any questions or trade setups. Premendra, good morning. Eileen says, yep, the interest rate thing will finally happen. Looks like it. We'll see. Graham, great to see you in the room. Christopher, Avery, Craig, the whole team's here, so good to be with you guys. So we have the BOC interest rate decision on tap at 10 o'clock. That's going to be the major highlight for today's event risk. We're looking at the dollar CAD on a lot of different CAD crosses, actually. Sterling CAD is also something we've been watching. And the thing I'm most interested in right now are still the Aussie crosses. So Aussie Yen is something I'm currently holding a short on, and Aussie Dollar also looking on that. So let's jump right in. And as always, your questions are welcome. So first things first, let's go over yesterday's update. Here's what the intraday update looked like. A little bit of a disappointment on Sterling Oz. It's continued the downtrend as planned. Nothing's really changed, but we didn't really get a chance to play alongside or get an entry on the short. So this one's kind of still running away from us. The whole premise of the trade was, look, this is a huge support region. This is a 1618 extension from the decline off the highs. And then you also have the 200-day moving average. Sneaks right in there at 205.50, at 205.33. Nice support range there. So on the daily chart for the Sterling Oz, looks like this. All right, we're kind of probing through this level today. Not necessarily interested in trying to short, even on a scalp basis down here, guys. I really want to see today's close solidify this move. Remember, it's not only that 1618, it's not only the 200-day moving average, but if you look back in price, clear pivot, catching the swing highs back in June and catching the swing lows back in July. So major key region here, both in price, previous price action, as well as the Fibonacci relationship and the 200-day moving average. Long story short, still looking lower, specifically if you close below 205.33. If we don't close below it, I'd still be expecting that rebound near term. Here's what it looks like in the 30-minute. So as per yesterday's 30-minute chart, there wasn't much play here. Massive range, so you are looking at a 50 pip ATR. The only trigger that came was in early Asia, Europe, basically ahead of the European Open into the Asia close. Right around 3 a.m., 4 a.m. here in New York, you finally saw this thing start to give a breakdown. Momentum gave you a nice short trigger. Here it is. Stop against the session high would have been very nice, tight stop. And then the play initially would have been taking out targets right here at 205.33, 205.50. Stop should be at break even at this point, back above this region, and see if you can get the continuation lower. But from here, there's really not much on tap. In last night's update, I did cite, 204.50 as a soft target here if you look back in price action. But the real major target to the downside would be 203.68, and that's going to represent that longer dated 50% retracement of the entire 2015 trading range. So we're at some contentious levels here for Sterling Oz, like the short side, obviously, but I'm not going to press it here below 205.33. If this thing closes back above it, expect a rebound. Again, near-term bearish invalidation. We're going to keep that steady at 207.90. Any questions on Sterling Oz? Monk Bat, I hope I'm pronouncing your name right. Says, hi, Michael. Just joined the community. Happy to be here. Glad to have you on board, my man. Feel free to throw out any questions that you have throughout the session. Always a pleasure to have you. So we'll see on the sterling Oz. I have a suspicion we're probably going to see this thing rebound higher. Note that we have made some divergence as we made this low probe below that major key support. So wouldn't be surprised if this thing gives us a little bit more of an upside to offer better short opportunities. On the broader picture, just to put things in perspective, again, you always have the scale charts, guys. Use that to your advantage to get a better gauge of where we are in price action. But just to put things in perspective, sliding parallel here off the lows from this early October dip. You can see it's already been tagged twice as support. Price is kind of dilly-dallying there right now. All right, so at risk for a rebound, if we see a move sharply, decisively break the lows that we just made, you look for that continuation down towards that major key target way lower down. Over at 203.69. All right, so that is sterling Oz. We'll keep our eye on that one. And here's another thing I was just looking at before the webinar, guys. If you take a look at the 1-minute chart for sterling Oz currently, you know, we're struggling below this major key support. If this is a legit break, we'll want to see this hold as resistance. But look what's been happening in the momentum signature, even on a near-term approach. First of all, that's a 3-point trigger break right there. Second of all, look what happened subsequent to that break. 40 hold, 40 hold, 40 hold. You're still not sure that we're seeing a turn in momentum. Here's your first 60 break of the session. Here's a subsequent 40 hold. Here's a subsequent 60 break. Okay, momentum signature is certainly shifting to the upside in the immediate focus, but you're at resistance. So you need to pop through this region to really get the validation for a little bit more of a recovery here. All right, next up on tap from yesterday's report was Aussie yen, and this was a setup I highlighted both on Daily FX as well. Again, I'm holding a short off this region. It's a really big region of resistance here as well. And the basic premise for this trade, again, derives from the daily chart. So you can see the region that we're coming up to. This is a longer dated 38.2 retracement from the decline off of the highs that we made last year. Okay, that comes in at 90.02, excuse me. You have a 764 retracement from the decline off the highs that you made in August. No big deal, just another fib. But you also have channel resistance, which is a parallel of channel support, 2 tags, and current operative embedded channel resistance. This is a parallel as well, and we're struggling there at this point too. So you have a 4-way confluence of Fibonacci and median line resistance, all confluenced around this 90.18, 90.30 region. Here's what it looked like on the 30-minute, okay? And you can see we're right in there right now. 90.30, by the way, is the actual July 9th low day close. So if we go back to July, the low day close comes in right here. You can see where my mouse is, 90.30. And that's what we're testing basically right now. Whoop. So it might have been a premature entry, but we'll see from a risk to reward ratio, 90.30 is right there. I mean, it's a pretty big level. If we topside break from here, you're basically looking for the 200-day moving average that takes you into 90.71. Subsequent targets are going to be up at this major key confluence that takes you into 91.47, 91.50. Also note that on the top side, you do have trendline resistance, okay, your channel resistance, whatever you want to call it, dating back to the high that you made there in November of last year. Okay, channel support, channel resistance, that confluence is on that 91.40, 91.50 barrier. If we break from here, immediate focus for me, the immediate focus is still to the downside. We are simply at resistance within the uptrend. And I can't really stress that enough. So we're nimble on the way down. We're quick to pull the profits as soon as we get that quarter of the daily ATR, and we'll play this as such. We got a couple of different things going for us. A, again, all the resistance we just noted. B, you've been getting ongoing divergence into the highs. Okay, even throughout these highs, we were talking about it yesterday in the webinar. Even throughout these highs, momentum still wasn't able to break not only 70, but it was still continuing to make lower highs, lower highs, lower highs. On this last stretch into a new high, still failing to make a new high in momentum. It's ongoing divergence, and you're at resistance now. So we'll see if we can get the pull to the a break to the downside. Major key support in the immediate bullish invalidation is 89.33. Okay, that coincides with the median line of this formation. Basically, that swing high from the 30th, and I think it was just a soft support target, and the swing low right here from July 27th. Both of those coincide right around that 89.33 level. All right, so if we break below 89.33, I'd actually be looking to place shorts into channel support as it stands right now, looking for about 20 pips on the downside. Probably take off a quarter of the trade at that point, stops at break even, and see if we can get the drawdown into 89.30. But at the end of the day, you know, you're looking for long triggers lower down. Still a constructive trade. Any questions on Aussie yen? That rally we made yesterday was the largest rally that we've seen since October 9th, just to put things in perspective. And it rallied right into resistance. Now, in keeping with the theme for the Aussie, I want to just kind of go through the Aussie pairs while we're on this. So this is what the Aussie yen is doing. Critical barrier at this point being tested as resistance. If we look to the cross markets, there's also some very interesting setups. Remember, the RBA came out, held interest rates. My interpretation was it was a little bit more upbeat, pretty steady as she goes. Yesterday's GDP numbers coming in stronger than expected, adding fuel to the fire. Interestingly enough, here was the GDP print. And this is one of the major things that started having me look for triggers on the short side to begin with. GDP beat, excuse me, on all accounts, couldn't make it through that high. And not only that, on that rally, momentum couldn't even make a run at 70. The signature was still heavy. So we'll see if we can get a hold here and a trigger to the downside as we head into the open. I see some questions from Craig on technicals on dollar CAD. We'll definitely take a look at dollar CAD. It's on the list, Craig. Chris says, Mike, in keeping with the Aussie pair, question about Aussie Kiwi. Maybe a pretty good short entry here. Yes, that's on my list as well, Chris. You guys are right on board. So let me just segue real quick, Chris, into Aussie dollar, just to keep the Aussies sort of in focus. So Aussie yen at resistance. Here's what Aussie dollar looks like. The daily chart, a little messy, which is why I kind of lost focus with it over the last couple of days here. Okay, so the bullish invalidation level has been raised to 72.41 as of last night's report. 73.39, this thing is at risk for a pullback below that region. It's basically what we're pulling off of right now. It's more apparent on the intraday chart. I'll show you in a moment. 72.40 also on the intraday chart is basically looking at this median line. A break below that would invalidate the long side of the trade. Resistance break with a move surpassing that 73.30 level. You're looking for the October high day close. That comes in at 73.60. And then 38.2 retracement of the decline off the May high. That comes in at 73.86. So the daily charts, just want to put this in perspective. Also note momentum coming into 60. It looks like we're holding. We're going to go ahead and adjust this support trigger. And keep that in view. By the way, Monkbot, just remember at any point during the webinars, if you need to take a freeze frame of any of the charts, there's a button in the top right hand corner. Go ahead and click on that and it'll save the freeze frame, a snapshot of any of the charts that you see posted here. So if you need them for future reference, feel free to do that. So that's the daily chart of the Aussie, not really that telling. Here's where the interesting part comes in for the Aus. So this is the update from last night on the radar charts. Here's what Aussie looked like last night. Again, on the back of the GDP read, you saw that 88.6, 73.39. That was the last target that was noted on the previous night's report of topside targets, it's 88.6. You saw us tag right into that and fail. In fact, that candle closed lower on an hourly basis. It was an hourly reversal candle. All right. So it does look like momentum is fading. So in general, very similar to the Aussie yen in that I am looking for short triggers. Very similar to the Aussie yen in that we've been putting in ongoing divergence on all the subsequent highs we've made to start the week. Here, the near-term break that would need to get at least a short bias going in the immediate focus would be right here. Basic trendline support, 73 barrier. The broader bullish invalidation level is down here at 72.40. As long as we hold above that, the broader trade remains constructive. Immediate risk still remains for a correction lower if we break sub 72.95. So play this range here near term. Like I said, a topside break, 73.60. Excuse me, 73.77. First initial targets. So I moved it to the radar chart because I haven't been personally getting involved in this one, although, you know, the signals have been there. The triggers have been really decent. Been messing around with the Aussie or the Sterling Aus dollar CAD I've been messing around with. That looks like it's about to make a topside pop through that major critical resistance, so we'll talk about that. But just keep in mind, the risk for a pullback sub 73.39 is there, okay? Eileen says, would you have taken the short trigger at about 7:38 Eastern on Aussie dollar? Let me bring up the 5-minute chart and see what it looks like. $7.30 to 8. I don't really see a trigger here, Eileen. The only thing that would have looked like a trigger break for me would have been this break on a 1-minute chart. That would have been the first break sub 40 that you saw in momentum, essentially for the last 3 sessions since, since Asia last night. So it's the first 60 break, and that also constituted a break of this near-term range that you made. Stop against the high would have made sense. That's a real tight stop. That would have been beautiful. A trade like that, sure. Yeah, 25, you're looking for 17 pips. You would have barely made it. Barely made it. But just remember on Aussie, I mean, I still think this thing can drop into that 73 handle, so keep that in mind, A. But B, yeah, I think that would have been an okay trade. I would have been more inclined, Eileen, to take a position like that if we were closer to 73.30, 73.33. Remember, those triggers are going to happen all the time, but our best bet is going to be when these triggers happen and price is closest to a resistance target. So, you know, the best ideal scenario would have been up in that 73.40, 73.33 range. That being said, yeah, I wouldn't have had any problem against that trade. Sure. Eileen, I'm not sure what that last question means, but the then time with those reports? What do you mean by that? Give me some background information on that. Decision not to take it because the reports were coming out. Yeah, it could have been that. Honestly, I just missed it, Eileen, on this one. And not only that, because I'm holding Aussie yen positions, it's very important to keep your dish diversified, guys. So I don't want to put all my eggs in one basket. If I'm short Aussie dollar, I don't want to double up with a short Aussie, or I'm short Aussie yen. I don't want to double up with a short Aussie dollar or a long sterling Aus. All these bets are on the Aus. If that turns around, now you're down on three out of three, right? So I told you I've been involved in the Aussie yen still. So I'm playing the short side of Aussie, Eileen, just by way of a different pair. Eileen says helps! Exclamation point. All right. Well, great questions. Great questions. Any questions on Aussie dollar or Aussie yen? I've covered both of those at this point. Again, in my notes here in my book, just risk for a pullback sub 73.39, bullish invalidation race to 72.40. Last Aussie pair I do want to go over. We went over sterling, Aussie yen. Aussie Kiwi, Christopher. That's what I was looking for. Okay. Aussie Key. Here's what Aussie Key looks like. So small ATR on the Aussie right now, including Aussie Key. Graham, I completely agree with you. Super small. In fact, one of the trades that we were in yesterday, I think got 17 pip ATR, quarterly ATR. So it's there. Got to be a little bit more patient on them. But you've been getting all this key Aussie data this week. You got the RBA, you got the GDP print. So it's been worth it, I think, in my personal opinion, to be looking at the Aussie crosses, even though the ATR. And remember, the ATR is not going to be so quick to react to big surges in volatility. A and B, Graham. If we look historically at price action, periods of really low volatility typically precede times of of surges or or a spike in volatility. Let's say that in times of great volatility. So usually before you get a high volatility period, you're in a lull for a while. So just because the ATR has been tight for so long doesn't mean it's going to stay that way. But B, with all the data this week, I think it's still worth a look at it. Aussie Key. You're coming into resistance again at 110.20. And we talked about Aussie Key on the 30th. We were talking about the support at 109.12, 109.20. And we were looking to sell rally sub 110.21. And 110.21 is indeed the bullish, or the bearish rather, invalidation level. You're coming back right up on that. Same trend line, guys. Same trend line from the 2014 lows. January specifically low. Again, being tested as resistance. Confluence of the 618 off the highs from September, and you got a nice move there. Aussie Key on the intraday looks even more interesting. Here's what the 30-minute looks like. So on its face value, Aussie Key has just set a really nice opening range, right, for the week. Opening range high comes in at 110.21, the same bearish invalidation level that we just talked about. Opening range low came in just above support. If you guys remember, we were talking about 109.20, 109.12. I was looking for a run into this region. We turned right ahead of it. The low is 109.23, 3 pips off. And here we are testing the weekly opening range high for the week. So at its face value, it's in a nice set of very clear opening range. If we see a topside break, you'd look for continuation. Okay? Don't forget the broader trend we're in, guys. It's been a pretty strong move here. And if this break of this formation off the yearly high is legit, we came back, tested as support, and this would be the break to put us on continuation into 111.15. Immediately, this is an area of possible short interest for Aussie Key. Here's a possible ML that's in play. A slider looked like it caught that low yesterday. And again, possible rally back into that upper median line parallel might offer a nice short opportunity to press the shorts again. And again, we discussed this. Could be in the making of a large head and shoulders formation here again. You never know. It's not an operable position until you actually see a break of the neckline. So in any event, you'd still be focused on a hold here, sub 110.20, 110.21. Chris, does that help? We're asking maybe a pretty good short here. I think we're approaching that area of which I'd start to look for it, Chris. Absolutely. I'm not really thrilled about the fact that intraday momentum made it through 60. So that's one thing I'm just going to note. Waning momentum. That would have been a delayed trigger, nothing to do there. Yeah, I'll be looking for short triggers on this, Chris, but momentum's been unable to break 40, excuse me, in the downside, so you're still technically in a constructive momentum profile. And let's see if we can get that stretch just a little bit higher. Remember, as you noted, we're working with a tighter ATR, right? And so I'm glad when I hear you guys say that, because all that means is our entries need to be more spot on. Okay, we don't have that flexibility. So yeah, I'm gonna wait to see if I can get a stretch higher to test the actual weekly opening range high, i.e., that upper median line parallel. I think that might be a beautiful short entry. Um, at which case, again, 21 pips is what you're looking for, but I would tack on a quick retracement if we get that hold up there into the open of US trade and look for a 50 bounce of the range. Chris, does that help? He says, don't know why, but feel more comfortable shooting Aussie Kiwi than other Aussie pairs. It helps, thanks. Agree. That's what's giving me a pause. The short-term frame momentum is strangely constructive against this resistance. And Chris, that happens sometimes, and oftentimes those will offer some really nice short triggers because it's been so constructive that if you get the short trigger break and continuation through 40, that's all the validation that you need holding that position. So we'll see if we can get that stretch higher, but I do like the idea. And certainly we're looking for to see if that can hold as resistance into this push higher. Questions on Aussie Key? All right. So those are the Aussie crosses I've been in focus on. We'll come back to these right ahead of the close of the session. They're at really interesting levels. I do want to try to get a short in here. Again, I'm already holding Aussie yen, so I don't want to get overzealous here on the Aussie crosses in general. But it might be a decent entry there. We'll take a look. All right. Next on tap from yesterday's setups, I do want to go over dollar CAD for Craig. Hey, Craig, here's what dollar CAD looked like yesterday. This is the same exact setup from the 29th, from the Sunday update, guys. Nothing's changed. The levels remain the same. In fact, all dollar CAD has done is set a pretty damn impressive weekly opening range. It's the same levels that we highlighted. Major key support right here, down into 133.13, 133.18. Resistance overshot it a little bit, but this was the upper median line parallel we were looking for if this formation was a hold. There's a convergence break with the 618 topside pop, again taking us through 60. I'm weary here. The bearish invalidation level we noted, guys, was 134, so technically we're taking that out right now. I know some of you are looking for a move lower. I know Mark is not going to be happy. What would you say there, Mark? Dollar CAD, don't say that. I don't want the pop, LOL. Yeah, I mean, look, if this is a legit break of the weekly opening range, man, it's could be sayonara here. Dollar CAD could really go for another tag of the initial target would be the high day close for the year. That's 34.19. But here's what we're looking at on the daily chart. All right, so if this is nullified with today's close, high day close 134.19, major key resistance that we just missed on the upswing last month, 134.61, 134.84. This completes 100% extension off the low from October. This is a longer dated 618 retracement off the decline from the 2002 highs. So just for note, some perspective here. BOC is on tap. It's the BOC. Stop loss at 134.45 here. Let's see, says Mark. Yeah, I'm I'm of the mindset of liking dollar CAD or liking Looney's strength. Okay, that's dollar CAD lower. This could be some front running of the number, which is why I don't necessarily trust it until we get the solid open of U.S. trade and we get that BOC rate decision out of the way. By the way, that's 10 o'clock here in the United States. And we're waiting for a hold of 0.5% on that. So we'll see what the commentary comes along with, but if we spike, let me just put things in perspective of what scenarios we can do today, guys. If this thing spikes into 34.19 and they sound rather hawkish, I would be looking for a fade of that opportunity against last week's high to try to press the short. That would be like your ideal play. If it plows through 34.19, the high day close, there's really nothing, nothing to look for. 34.50, 34.58, and then again 34.84 is what you'd be looking for. Any questions on the Loonie heading into today's rate decision? Basically, guys, above that 33.76 level, be cautious of trying to short it unless, like I said, the result of the data comes out with a really strong surge in price alongside some hawkish commentary, constructive commentary. It might be a nice fade opportunity. Mike, do you think dollar CAD lower could lead more support for Aussie dollar and Kiwi dollar short term? Christopher, I try not to think on that try to dwell on that too much. It's the interest rate decision for the Loonie, so inherently it's going to hit all CAD crosses. I don't necessarily want to equate what's going to happen on the back of that release to, a Kiwi dollar trade. Mark says an ML starting on August 25th looks pretty good on the daily. Let's take a look at what Mark's looking at. No. Could be in play, Mark. It could be in play. I wouldn't necessarily want to stress it at this point because either way, we have resistance right here. Former sliding parallel support is what we're testing as resistance, and then 34.19 is the high day close anyway. So, look, I like that you're looking at resistance there as well. Either way, we need to see this thing hold sub 34.19. He says wishful thinking maybe. I mean, I don't want to stress the first tag of a subsequent candle in a formation that large, Mark, in anything operable that I'm trading on. Because, my man, we just don't have any rebounds or reversals off that level or any type of justification to really be able to use it with confidence, let's say that. So I wouldn't say you're wishful thinking. You might be onto something. It might be a great structure, but I think it's too early to tell to use that as something operable yet, in my opinion. So I hope that helps. Mark, Hussein says, what the estimate result will be on dollar CAD. I meant the rate. So consensus estimates are looking for a hold of 0.5%. Hussein, if you look at Credit Suisse overnight swaps, market participants are currently factoring in 0% chance of a move on interest rate cuts. There's not really much expected from the BOC. And here is what Fed futures are looking at, or here's what futures are implied probabilities are looking at. 0% of a probability of a hike, a 3.9% possibility of a cut. 96% chance for a hold is 0.5%, which is what the rate is right now. So not really much expected, Hussein, from today's BOC decision. More so, people are going to be looking for the commentary. All right. He says, thanks. You're more than welcome. I think I'm caught up with all your questions, guys. Feel free to let me know if I missed anything. Mark says, if there's time, Swiss yen. Really, Mark? Long from 119.08, looking for a level to short. We'll definitely take a look at Swiss yen if we have time. Let me just get through some more of these pairs that I wanted to cover. What an odd pair. All right. Sterling dollar. Quick question here from Avery saying, Mike, quick question about sterling dollar. What would be the OWR? I think you mean ORW, opening range, the weekly opening range. Still learning how to identify these. Sure. So let's take a look at the sterling. This was also highlighted on yesterday's radar charts. Here's the British pound look like yesterday. And just get the commentary here. So the focus was on the opening range that we set right here. We're testing the opening range low right now, Avery, with a short side bias favored sub 150.84. So the risk remains to the downside. You need a break of the weekly opening range low to put continuation into play. This was a beautiful short entry, guys, even from here last night. You had a perfect trigger that we were looking at, into the mid-Asia session. The break wasn't the cleanest, but even on the rebound here in tests, you had a stop against the opening range high for Asia. Beautiful, beautiful play. I got out way too early on this one, but whatever, a win's a win. We'll take a quarter of the daily ATR at any point. But the weekly opening range, to answer your question, Avery, is this. You look at the weekly open, you look for the market to set a high and a low. I don't want you to stress time, Avery, as much as I want you to stress price. So what do I mean by that? Typically the opening range will be set on a Monday, Tuesday stretch. Sometimes it can take till Wednesday. Sometimes it can be set on Monday alone. All you're looking for is for price to make a low and defend it, and a high and or defend it. So basically we came into the market, we made a low, we pressed into a new fresh high, it failed. This is your Monday, Tuesday stretch. Support for the opening range low came off of a big level, 100% extension. Resistance came at a Fibonacci level, 38.2, and then we retraced right back to the mean. So basically we covered a range. We made a 50% retrace of it. That sets an opening range high at 151.23, an opening range low at 150, basically. So if we break the lows, Avery, that gives you a short side bias heading into the close of the week against the highs. If you break the highs, that gives you a long side bias into the close of the week against the lows. Typically, historically speaking, and this is not a strategy I've made up, guys, or it's something that me and Jamie just thought up. If you read a book called Mark Fisher, The Logical Trader, really nicely outlines his basic use of the opening range strategy, specifically in commodity pits way back in the day, and it really makes a lot of sense. Now you can use this same strategy on all different time frames. We can zoom this into an hourly opening range, in which the market will set a high or low within the first 10, 15 minutes of the hour. You look for a break of that, and there's a high tendency for the market to close at the extremes. So when the weekly opening range breaks, if it breaks to the upside, you expect to see a Thursday, Friday high at some point. If it breaks to the downside, you expect to see a Thursday, Friday low at some point. And don't take my word for it. Again, look at price action week by week. Typically, you'll see that if the market is trending, your high will be made, your high or low will be made early in the week, and the extreme will be set later in the week. Here's your weekly open. Here's your weekly close. Okay. Here was a weekly opening range that broke on Wednesday, the 18th. Was that a Wednesday? Yep. Okay. Surged, you set a Thursday high, and then it retraced and came right back into the open of the week, essentially. Here's an opening range. This was not an opening range. No opening range that month, that week. This was an opening range, again, Didn't break until later in the week. You saw it close that week at the lows. But you get my picture, Avery. Is that offering some clarity? So for me, because we were at a major support to begin with in the pound, we said, look, the opening range is set. We spiked into the 38.2. We came back. While below the median line, we are looking lower. So you're looking for short triggers while below the median line. We're now testing the weekly opening range low. A break from here, you're looking for 149.50. Big support, way lower down at 148.60, 148.50. But either way you look at it, trades at support. So keep that in mind as you head into the U.S. trade session. Avery says, yes, thanks. All right. Quick little wrap up on opening ranges never hurt nobody, right? um, okay. I do want to take a look at sterling yen as well. So any questions from yesterday's setup on the sterling dollar? All the levels remain the same, unchanged. We'll be able to, or will I, this resistance, trigger, and momentum is sort of what would want to take us off short exposure, but keep that in view. Sterling yen was a question that we had here in the webinar yesterday. We went over it. I just want to touch base again. Hey, at the end of the day, November open held yesterday. Remember 85.92? Remember 86? We were talking about that key level. Yeah, held like a charm. So here's what it looks like in the intraday. Okay. Here again, Avery, I'd be comfortable saying that this is the weekly opening range high at this point. Why? Because the opening range high came into a major key resistance. It held and pulled off. If you see a break of this, it's more validation to play the breakout play for the upside. Bottom line, you're at risk while sub 186. It's a pretty big level. Let me snap this for you real quick. Chris says, no matter how many times I hear that, it helps. So opening range talk, says Christopher. I appreciate that, man. And guys, anytime, feel free. Okay, I want to make sure we're all on the same page and that you're getting the most out of these setups. So definitely feel free. Avery says, Mike, any euro pairs that might be interesting before ECB tomorrow? Thanks. Sure. Yeah, we'll take a look at some of the euros crosses. I haven't really been crazy about them. You guys know that. We went over it yesterday, but here goes nothing. Here's what the euro dollar looks like. You see a lot of people trying to call the turn. You see a lot of clamor on Twitter and even on some financial news publications of people just blindly bearish. It's a bearish trade, no doubt. It's in a bearish formation, no doubt. Is it a downtrend at support? No doubt about it. No doubt about it, okay? We talked about the 2000 trend line that we tagged again in March. We're there right now. We barely had a daily close below it before quickly rebounding right back above. Let's mark the December open. Ongoing divergence into the lows throughout the decline in November trade. Remember, divergence doesn't necessarily need to have a higher low while you're having a lower low in price. All you're looking for is the oscillator is not confirming an extreme in price, meaning a new low, no new low in the oscillator. A new low, no new low in the oscillator. Equal lows here, still considered divergence in my opinion. And again, this tells you that downside momentum is waning. Is that enough to try to take a long? Still no, guys, still no. Even if you look at the near-term trigger or the near-term price action, we have been holding sort of a decent channel formation. just off the highs from November. It was looking for a stretch into that 106.40, didn't quite get it, turned around just ahead of that 106.36. And if anything, guys, treat it as a weekly opening range. If ECB comes out and this thing pops to the upside, which is my favored scenario, I'd be looking to buy pullbacks. If it breaks lower, guys, just not interested in trying to chase it. You know what I mean? We need a decent rebound to be able to take a firm stop against something. And a downside break does show 104.80. So you got a lot of room. A lot of room. By the way, that 105.65 was the low day close for April. So the levels have been clear. It's just, whether this thing is going to be able to hold here or turn. I don't know. Also, look at the momentum signature. Who was asking about this for the ECB tomorrow? Avery. Also, if you look at the momentum signature on Euro, sub 40, above 60, no clear conviction. So all I would say is watch that daily chart above that 2000 trend line. The risk is for a rebound higher. I'd be looking to target the median line off the high. And if we do find some conviction for basing here, meaning the opening range for the week breaks to the upside for the euro, I tack on a quick retracement, and we'd be looking to play just into a basic 236, which again comes in after that median line. So this will be your first target. 236 would be the next. Craig says, Mike, I've never been able to log into IdoSearch, although I've been trying for days. Is there someone at SB I can call or email to get help? Craig, what's the issue that you're running into? Guys, everyone should have access to IDO just by clicking IdoSearch and clicking log in. You shouldn't have any, you shouldn't actually have to enter any credentials. Now, keep in mind, the IdoSearch is only operational from 9:30 a.m. to 11:30 p.m. Here in the U.S. Actually, 11:59 here Eastern time. So he says he gets a blank page. Craig, make sure hold down Control when you're doing it, and make sure you don't have any pop-up blockers because it's going to open in a separate page. And try a different web browser if anything, Craig. I think we haven't gotten any complaints that anyone's having any issues here. Right, market. Just making a point here also, just in case you didn't remember, Craig. Also, you need to be logged into SB Trade Desk, then click on the IDO search menu. So you have to make sure that you're logged in first, click on IDO, and then click on this login. But Craig, if you can just shoot me a screenshot with the screen that you're getting and any issues that you're having, kind of write me a quick description. I'll go ahead and pass that over to IDO search. We'll definitely get it looked at for you. All right. Mike, on the stretch lower this morning in sterling dollar actually broke the low in price from 1130. Do you consider that a real break since it didn't close there? 1130 on sterling. Broke the low from 1130. Who's asking this? Chris? Come on, Chris. You're talking about a fractional, man? The low here is 149.92. Low here is 149.91. No, man. No, that's not a break. Guys, markets don't work in a vacuum, and it's not a science. So I'm not sure where to go with that, Chris. He's saying, "Cool, thanks." I want to just let you know. No, first of all, you need to get I'm trying to understand where you're coming from with that question, Chris. Are you looking for validation to press a new short with that break, or were you looking to hold on to a short and you're wondering if that break constituted a move? Because it's very different. I get concerned when I hear people saying that. Oh, it broke by a pip. Is that a break? No, guys. And if you're looking to operate something new off of a break of support, it's always going to be difficult. You're always better off selling into resistance, buying into support. If it breaks, you wait for a retag of it as resistance, then you sell. Selling a break of resistance is always going to be a tricky play. You got to have quick fingers to play like that. And a lot of times it leads to chasing. So be mindful of that. But no, a one pip dip doesn't constitute a break by any means. It says just using it as more conviction for selling a bounce against the high. Yeah. So I wouldn't use that for any type of conviction, whether it's a break or not. That's just a test of the low, and so far it held. If the U.S. opening range, Chris, happens, so let's say we go into like 9:30, opening happens 10 o'clock, 10:30, then we break 49.91. Yeah, I would like that as a conviction break, sure. But a test and a one pip dribble wouldn't necessarily call that conviction break in price. Momentum on the other side, this is the first time that we've dipped sub 40 or sub 30 rather for the week. So it does look like momentum is turning over. I've been in and out, so don't know if you already touched this topic, but should we not expect interesting volatility from Canada rate decision? It says forgot to say hello, Mike. Well, Pietro, good to see you as well. Hello. The markets are expecting a hold at 0.5%. It's pretty much a 96% chance markets are factoring in of that outcome. The commentary is going to be what's important, Pietro. If they come out with a little bit more of a hawkish stance, I do think you can see some CAD strength. Now, dollar CAD, we talked about this earlier, is breaking the formation we talked about. The bearish invalidation level noted was 133.99, basically 134. What I was saying is on a stretch higher to test the high day close. If you get a more hawkish sounding BOC on a spike into 134.19, stop against the high might be a decent play. But above 134, you got to be mindful that this thing could really just look for continuation to that 34.80 target. All right. I hope that helps, Pietro. Euro Oz turned around at the April high, says Mark. So Euro Oz is another one that I would be looking at for the Euro crosses, going along Avery's questions on the ECB setups. You know, we came back, checked this as resistance. We talked about this yesterday. It broke lower. The only thing is I don't have a setup. And it's funny because Mark McDowell, if you're in the room, I saw your tweet yesterday saying Sterling Kiwis moved, 500 pips. Why aren't we looking at that? Guys, just because it's moving doesn't mean there's a setup there, right? And that's what sets us apart. We're not going to just go chasing markets because they're on the volatility. If the setup is not there, knowing the direction of the price is only 50% of the game. So Euro Oz broke a major key level. I do like its short sub 146.80. Here's what the near-term chart looks like. It's still not the cleanest thing, so I haven't necessarily taken any positions on this myself. But just to highlight, a break of descending channel formation or descending pitchfork formation can be the sharpest part of the decline. So now that we've came back, tested it as resistance, I do think this thing could really see some further losses from here. And that equates with Aussie strength, so we'll keep that in mind. So you're looking at the ML from the spike. This? Yeah, I see what you're talking about. 3 touches there. Either way you look at it, Mark. I mean, what do you do from here? On an intraday approach, you still want to stay bearish sub the median line. Bullish or bearish invalidation, I would still keep at 46.80. Downside targets, interestingly enough. Here's the ML that we've been looking at since 2013. That one held for some time before the break that we made here in August. That ML comes into play just a little bit lower at 143.76, about 100 pips from where we are right now. As far as trying to play the reversal for you, Mark, watch that oversold condition, man. It's the first time we've seen an oversold condition in momentum on a daily basis. Well, brief dips right here, but essentially since that September spill. Might be something worth looking at as we get into the ECB, obviously. Eileen says, have you found IDO helpful for your short-term trading too? Yes, to find trends. Eileen, I find it helpful in confirming what I'm thinking. So if I have a bias on a pair, and I'm looking to issue you guys a long bias on, or a short bias on Aussie yen, or a long bias on Euro yen, I'll go and I'll run a quick scan and see if there's anything, um, worth note. The most important thing to note, guys, is that the longer time frames are always going to be a little bit more beneficial for you guys using IDO. The 3 month typically is one of the best ones I've seen, at least in helping us identify trends and ones that work out really well. The 5 day is going to be quite a little bit more granular, so it's not going to give you quite as many matches. One other thing I wanted to note is that we don't have intraday on IDO yet, intraday data. And that's something that's coming up soon. We're working to develop that with IDO as we speak. So that's going to be something we're really looking forward to. And then I would expect, Eileen, that would be a huge help, even to confirm throughout the course of the session, right? Use the month search then. Yeah, Eileen, I would say the month search are probably the best ones. Give you a medium-term look at what's going on in the market. It's pretty constructive on Euro Yen, actually, over the next few days. And not only that, but what Jamie likes to call it, if you guys watch the platform walkthrough, as windows into price opportunity. These stretches that show you possible percent up and percent down. They're in windows and where price action may end up, and offer sometimes a much more conviction trade when you're looking at a position, especially on a sort of breakout type of trade or an intraday momentum, or excuse me, an intra-week opening range breakout. They can definitely be very, very helpful. So I encourage you guys to look at that. I know it's limiting between 9:30 and 11 because we can't go over it here in the webinar, but don't forget we have Jamie's midweek strategy webinar today at 1 p.m. Eastern. Feel free to pick his brain on any IDO searches you guys have been looking at, but definitely everyone here in the room has unlimited access for the life of your accounts, guys. The SB premium pricing starts next month, so you will have to pay for access to IDO past this month. Swiss yen, I'm going to take a look for you, Mark. He says was best long on IDO yesterday. Swiss yen looks like this. I don't even know if I have a chart for it. Here's in November. Okay, bear with me one sec, guys. We're going to just do some on-the-fly analysis here for Mark. See if we can come up with anything interesting here on Swiss yen. Okay, so we've modified that fork just to encompass this retrace, this basic trend line. Ooh, nice momentum trigger on a daily basis. Let's see what the 30-minute looks like. Here's your weekly open. And you're testing the weekly opening range high here. Momentum signature looks pretty constructive. I like it. I like it. So you came from oversold conditions and momentum. You came to hold 40, even to start off the week, 70 break, hold 40, 70 break again. Looks pretty constructive. You need to push through the weekly opening range high here to get this thing going. Just near-term price action consideration. Has that 618 basically capping the advance right here at 120.10. Subsequent target at 120.60 to the upside. And just to play the range here off the November highs. Not bad. So first major area targeted support resistance rather, basically go 120.16 to 120.54. So breakout from here, look for that move into 120.60. I'd probably set the near term. I'd probably set the near term bullish invalidation level on this one, Mark, right around that swing low from Thursday of last week. That coincides pretty nicely with that channel support. Basic. But watch this divergence into the highs. We really want to see this thing continue to push through. 120.10 is going to be your big barrier to break near term. All right. Quick on the fly for you there. Hope that helps, Mark. All right, guys, I'm way over on time. We'll go ahead and wrap things up here. Keep your eye on the Aussie Yen, the Aussie crosses that we talked about. Sterling Oz is something we'll want to see react near term. It's got to see some reaction off of this support, either a continuation and breakthrough, or if we close above 205.33, it could be something big. Dollar CAD also heading into the BOC in just under half an hour. Watch that resistance barrier. Again, the high day close is going to be 34.19, a region that we're looking for there. Guys, best of luck trading. I will see you tomorrow morning. Again, quick reminder, 1 p.m. Eastern, Jamie will be on board with his midweek strategy webinar. Till then, best of luck trading, and we'll see you tomorrow. Cheers.